Under current law, most people are required to have minimum essential coverage through an employer, a government health program, or health plan they purchase themselves. Those who do not have health insurance in 2018 will pay a tax penalty. Starting with the year 2019, the tax penalty no longer applies. Some people qualify for an exemption from this requirement, and they do not have to obtain health insurance or pay a tax penalty in year 2017 and 2018. For tax year 2017 and 2018, when you file your income tax return, you will have to enter information about your health insurance coverage or file an exemption. If you do not maintain minimum essential coverage during the year and do not qualify for an exemption, you will pay a tax penalty to the Internal Revenue Service on your tax return for that year. Again, starting with year 2019, this no longer applies, and because changes enacted in January, or rather in December of 2017, as part of the changes to federal tax law will eliminate the tax penalty in the future, but those changes do not go into effect until the 2019 coverage year. Just a reminder, the annual penalty for not having health insurance is greater of $695 for each adult and $347.50 for each child, up to $2,085 per family per year, or the 2.5% of the tax filer's annual household income minus the federal filing threshold. So let's explore the exemptions from the tax penalty one by one. The following groups qualify for an exemption to the tax penalty. Let's start with those who are not required to file taxes. So no tax filing requirement. People whose income is below the minimum threshold for filing a tax return. The requirement to file a tax return depends on your filing status, age, and types and amounts of income. You can use the Internal Revenue Service Interactive Tax Assistant to find out if you are required to file a federal tax return. The short coverage gap. Consumers who go without coverage for less than 3 consecutive months during the year are exempt from the penalty. Hardship. Consumers who have experienced difficult financial or domestic circumstances that prevent them from obtaining coverage, such as homelessness, the death of a close family member, bankruptcy, substantial recent medical death, or disasters that substantially damage a person's property, also qualifies as an exemption. Unaffordable coverage options. So consumers who can't afford coverage because the lowest priced coverage available to them would cost more than 8.16% of their annual household income are also exempt from the penalty. For Covered California, the lowest cost plan would be the lowest cost bronze plan available to that individual. Next, incarceration. Consumers who are in jail, a prison, or similar penal institution or correctional facility after the disposition of charges or judgment against them are also exempt from the penalty. Those who are not lawfully present. Consumers who are not U.S. citizens, U.S. nationals, or lawfully present in the United States are not subject to the tax penalty. Religious conscience. Members of a religious sect or division thereof that has been in existence at all times since December 31st, 1950, and is already recognized by the Social Security Commissioner as opposed to accepting any insurance benefits, including Social Security and Medicare, are exempt from the tax penalty. The Social Security Administration administers the process for recognizing these sects according to the criteria in the law. Healthcare sharing ministry. Members of a recognized healthcare sharing ministry are also exempt from the penalty. American Indian tribes. Members of a federally recognized American Indian tribe, or those who are eligible for services through an Indian health services provider, do not have to pay the tax penalty and therefore exempt. Exemption applications are now available from the federal government. For more information and links to the application, you can visit healthcare.gov or call the Federal Marketplace. Individuals over the age of 30 who have certificates of exemptions must purchase their catastrophic plan directly through a carrier. If you have questions or comments, feel free to share your thoughts by commenting under this video. We welcome likes, shares, and of course, new subscribers. As always, thank you for watching.